This is Nightly Business Report with Tyler Matheson and Susie Garrett. Brought to you by
TheStreet.com, interactive financial multimedia tools for an ever-changing financial world. Our dividend stock advisor guides and helps generate income during a period of low interest rates. Real Money helps you think through ideas for investing and trading stocks. Action Alerts Plus is a charitable trust portfolio that provides trade-by-trade strategies. Online, mobile, social media. We are TheStreet.com.
Blue chip bonanza. The Dow sees its best first half since 1999. But can the gains continue? And where should you invest now? Our Market Monitor guest answers your stock questions tonight.
Down on the farm. Are you paying more at the grocery store? A new government report suggests relief may be on the way.
And open enrollment. It's just 100 days away. And for those looking to buy health insurance on the newly formed exchanges, the options and costs are going to vary widely. We have all that and more tonight on Nightly Business Report for this Friday, June 28th.
Good evening, everyone. If the stock market had a coach, this evening's halftime speech would probably go something like this. Good first half, good second quarter, but you started to mess up there at the end. At today's midway point of the trading year, the Dow's nearly 14% return was its best first-half performance in 14 years for the S&P 500, up more than 12%. It was the best since 1998. NASDAQ has gained nearly 13% this year. Now, the numbers for the second quarter were pretty nice, too, with gains for all three of those barometers. NASDAQ led the way, up 4.1%. But June was another matter. Dow, NASDAQ, and the S&P all were negative for the month, breaking monthly win streaks at 6 for the Dow and 7 for the NASDAQ and the S&P. Now, the indexes, spooked by talk the Fed may cut back its stimulus and by sharply rising interest rates, are all off more than 3% from their closing highs about a month ago. Stocks did log gains of roughly 1% for the week just ended, but today's trading on the second heaviest volume of the year was mixed. The Dow, closing near session lows, fell about 115 points. The NASDAQ was able to squeeze out a 1-point gain, and the S&P 500 closed down a little bit, about 7 points at 1606. Now, gold did recover some of its luster today. It rose $12 an ounce, but it had its worst quarter on record and is down 27% for the year so far.
Tyler, our other big story today, BlackBerry. Its stock was one of the biggest decliners. Shares plunged nearly 28%. Investors dumped the stock after the company posted a surprising quarterly loss and a big drop in subscribers. And things don't look so good for the future. The company warned of more losses. BlackBerry lost 13 cents a share in its fiscal first quarter, and revenues were lower than expected. So what's next for BlackBerry? And can it ever wow consumers again? Seema Modi gets some answers.
Wall Street is losing confidence in BlackBerry after it reported earnings today. Shares are now down 93% from its record high hit back in 2008. Back then, BlackBerry was considered a hot tech giant with a sophisticated, cutting-edge smartphone on the market. But as competition ramped up from the likes of Apple and Google, BlackBerry looked the other way and refused to believe that it would lose market share. But that's exactly what happened. Since the iPhone came out on June 29, 2007, shares are down more than 80%, which equates to a market cap loss of $31.5 billion. BlackBerry finally realized it had to innovate and provide its customers a touchscreen device that had fun apps, a high-tech camera, and all the features that the iPhone and Android-run phones were offering. The new BlackBerry Z10 and Q10 phones came out this year. It seemed to be too late.
Currently, BlackBerry has less than 5% of the market share, but at its peak, it was well north of 35 to 40%. They did dominate the North American landscape, and globally they were doing pretty well. So as you can see, the company has declined substantially since its peak. People thought this was the end of the beginning, but now it appears that this is the beginning of the end for the company.
And while analysts were excited about the launch, consumers still seem to be obsessed with their Android-run phones and Apple iPhones.
I got pretty used to the iPhone, so I haven't missed my BlackBerry at all.
I don't like the keyboards on a BlackBerry. I'm using my thumbs. And my Androids, I get to swipe with it.
I don't like the QWERTY that much. I like the usual and the touch and type. My husband has a Droid. He suggested I try the iPhone. My son has all Apple equipment, so we figured we'd stay in that family, the Apple family.
CEO Thorsten Heinz still confident that the company can make a comeback, saying that BlackBerry is still in a turnaround period and that transitions take time. For Nightly Business Report, I'm Seema Modi.
A very different story at Noodles & Company today. The Colorado-based casual dining chain began selling shares for the first time today, and the stock soared. CEO Kevin Reddy, a former executive at rival eatery Chipotle Mexican Grill, is confident about the pasta-based restaurant chain's future as it plans to expand nationally.
We've been one of the best performing restaurant brands in the best space over the last 5 years. We've already been delivering double-digit unit growth. We can plan to continue that path and take globally inspired dishes to many more neighborhoods in the years ahead.
Open today, closed today, up 104%, easily becoming the best performing IPO this year.
Well, turning to the bond market, investors have been bailing out of bonds during the quarter. And in the municipal bond market, investors withdrew a record $4.5 billion from muni funds for the week ended June 26th. For the month of June, they pulled out nearly $10 billion. That's according to Lipper. So how should investors position their portfolios? Joining us now to give her perspective on the muni bond market, Natalie Cohen. She's head of municipal research at Wells Fargo Securities. Natalie, I know that you think that there are some screaming buys in the muni bond market, but I first want to start out with investors who already owned individual municipal bonds or muni bond funds. What should they be doing right now?
Well, you have to get back in a period of volatility like this to the fundamentals, which tell you to have a diversified portfolio, and that includes bond funds as well. You can have a shorter duration fund, a slightly longer duration fund. If you have all of your assets in a long fund and the fund sells off, then obviously you're going to take a hit. So you should apply the same fundamental strategy as you would if you were purchasing individual bonds and, laddering a portfolio, for example.
I mean, the rise in interest rates is not all bad news, I suppose, for people who own individual bonds, because if they don't sell them, they don't take a loss on them. And if you're buying new individual bonds, you're getting a higher yield. What would you recommend for the individual investor who wants income? That's all they care about. Should they buy individual muni bonds if it helps them from a tax-advantaged standpoint, or should they go into a fund?
Well, right now, this week, at the beginning of the week, there were some bonds. This was a very heavy volume week in the municipal market, and that's purely by coincidence, unrelated to announcements by the Fed and so on. That bonds got very cheap. And so retail investors saw the after-tax advantage of purchasing individual bonds. We would say, as far as those that hold funds, that it's extremely hard to time the market. You can't just say, well, I lost, I got to get out, because you don't know what's going to happen next week, next month, and so on. So, yes, we all believe that interest rates are going to be rising at some point in the future. They have risen in the last 2 weeks. And have steadily. So, you need to position yourself with diversity in terms of length of time, shorter, medium term, and so on.
Natalie, you've been talking about the fundamentals of investing in muni bonds. And so I want to ask you this. As investors see headlines, some of the headlines are saying states have more surpluses. That's good news. But you also see the headlines of some cities that are having financial problems, like Detroit. What is the most important tip that you can give investors as they navigate looking for a muni bond investment besides just the yield?
Right. I think it's important to separate the credit issues from the market. Those are very different, and they tend to get blurred together oftentimes in the headlines. State general obligation bonds are very strong, including, for example, the state of Illinois, which has in its constitution that it has to pay the general obligation bonds. If you're a more adventurous investor and you want to go down the credit scale, what we see as stronger are what are called revenue bonds or dedicated taxes, those tend to be outside of bankruptcy. They're not affected by any kind of a bankruptcy.
All right. Well, thank you so much for giving
You're
us
welcome.
some insights in this complicated
thanks for your
market.
interest.
Natalie Cohen is head of municipal research at Wells Fargo Securities.
Great. Thank you.
The Securities and Exchange Commission is reviewing how the Institute for Supply Management releases its monthly manufacturing data over concerns that some investors might receive potentially market-moving information from the ISM before it's released to the public.
And there's another government investigation we want to tell you about, this one from the Justice Department over the proposed merger of American Airlines and U.S. Airways. The sticking point here, antitrust issues. So the DOJ wants to know whether the combined airline, which would be the world's largest carrier, will agree to sell plane slots, takeoff and landing rights, or reduce their dominance of flights at Washington's Reagan National Airport. If the deal is approved as is, the new airline would have more slots than Delta and United.
Ford Motors is recalling 13,000 new cars and SUVs to repair child safety locks on rear doors that might not properly work on some Explorers, Tauruses, Lincoln MKS vehicles as well.
And Google is going into gaming. The search giant is taking direct aim at Microsoft's Xbox and Nintendo's Wii by announcing plans to launch a video game console for your living room, one that could also potentially replace your cable box. Google also unveiled plans to make a wristwatch-like device that would run its Android operating system. Sound familiar? Well, it's a device that Apple has been rumored to have in the works as well.
And still ahead, how the cold and wet Midwest spring may impact the price you pay for goods at the grocery store. But first, a look at the best performing sectors in this first half of 2013. It is hot, very, very hot. Most of the nation's southwest is in the grips of a dangerous and record-breaking heat wave. Excessive heat warnings have been issued for most of Arizona, Nevada, California, and parts of Utah, and will be in effect through Monday. Look at that, 109 in Las Vegas. Daytime temps throughout the region are expected to reach triple digits, of course, today, over the weekend. All-time record of 117 degrees in Las Vegas could be broken Saturday.
Now, despite the heat, there was some good news today from the Agricultural Department about the nation's corn crop. Despite a severe drought last year and a very wet spring this year, corn is doing a lot better than expected right now. Jane Wells has more.
For months, Americans have been noticing higher prices for all kinds of groceries.
I probably spend like $700.
Asparagus. $4.99 a pound.
Some relief may be on the way.
I think we have a record crop growing in northern Illinois for sure, and maybe in the eastern corn belt.
Jerry Gulke grows corn and soybeans outside Chicago. What a difference a year makes. Last year he was facing disaster.
This plant here is way behind, and you can't, there's the silks in here, and you can't find evidence of an ear coming anywhere.
An epic drought hit the corn belt. This year the problem for some has been too much rain. Still, the USDA predicts that farmers will plant more than 97 million acres of corn this year, the most since 1936. They're estimating nearly 78 million acres of soybeans, a record, and even more wheat is going into the ground.
Most of the corn and soybeans grown in this country goes to feed livestock, which is one reason why meat prices have been so high, especially the beef in your burger. So these new large planting numbers from the government really surprised the futures market. All the prices of grains on the futures market went down, especially corn, because more corn means lower prices.
After hitting $8 a bushel last fall, Gulke says corn prices this year could fall to half that, back to what used to be normal.
At the last minute, I actually converted over about 10 to 15% from soybeans to corn. I got kind of trapped emotionally in that idea that all I heard about was how wet it was in Iowa and Minnesota, and I thought, well, I've got perfect growing conditions, so I planted the corn. And we'll just see how many other people think like I do.
It appears a lot of other people thought like he did. And if the weather holds, by fall, America may see a bumper crop of amber waves of grain. For Nightly Business Report, I'm Jane Wells.
A case of contagion leads our market focus tonight. IBM sandbagged the Dow today, largely in reaction to Accenture's poor sales and outlook. Accenture and IBM compete in IT consulting, and Accenture's guidance for the current quarter and the year dropped, and that sparked concern that the consulting business is slowing. For its part, Accenture dropped more than 10% on 10 times normal volume, and IBM was off 2.3%. At the other end of the Dow chart, Intel was a gainer as the new leadership team told reporters its tiny Atom chip is going to be a star in smartphones and tablets. But CEO Brian Krzanich was less certain about how to capitalize on Intel's set-top box for internet video delivery. Investors did react positively, though, on a down market day. Intel gained less than 1%. It closed at 24.23.
Home Depot was the best performing Dow stock today. In a week of three-digit pops and drops in the Dow, Home Depot was a steady gainer thanks to positive news on housing. For the week, HD was up almost 5%, closing today at 77.47. Hospira Pharmaceutical was a top S&P 500 gainer. Its anti-inflammatory treatment for several conditions was recommended for use in Europe. Shares jumped 6% on triple the normal volume to close at 38.31. And JetBlue founder David Needleman is reportedly putting together an investment fund to buy back his old company and merge it with his Brazilian startup airline. Needleman said the report in a Brazilian newspaper is not true, though. Still, JetBlue shares gained nearly 3.5% on heavy volume to close at $6.29.
Our weekly Market Monitor guest tonight says the good news for investors is that the stock market has gone through its correction. That's one reason why he is positive on the outlook for stocks for the rest of the year. Welcome back, Howard Ward, Chief Investment Officer of Growth and Equities at the Gabelli Funds. Howard, always good to see you.
Nice to be here, Tyler. Thank you.
Terrific. Make your argument as to why the second half of the year, maybe not as good as the first half with double-digit gains for the Dow, the S&P, and NASDAQ, but nevertheless a good one.
Well, we had a positive earnings surprise in the first quarter of this year with earnings up 5%. We think more is in store for the second quarter. We think this particular quarter will be the weakest quarter of the year, but we still think we'll see upside earnings surprises and then an acceleration in growth for the balance of the year. So really, it's going to be positive earnings surprises driving stocks to new highs this summer and perhaps to 1740 or higher by year end.
Howard, we're going to do something different tonight. As you know, we asked our viewers to give us their stock questions, and we got lots of them, and we got a lot of them on Micron Technology. Wayne from Texas sort of asked the drift of it. As a former employee and Micron Technology loyalist, I'm interested in why MU has a 6-month run-up from the $6 range to $13. What's driving the stock?
Well, you know, this is one of the leading domestic producers of memory chips, which is very much a commodity-like business, but there's been some suppliers have fallen out of that business in recent years. Business is good. Micron reported a very good quarter a little over a week ago. Good top line, good bottom line, good margins. So that's the good news. The bad news is this stock has more than doubled so far this year. It's a notoriously volatile business. I would really take my cue here from the insiders. And the insiders, I'm afraid, have been selling. There was a flurry of selling around $10 a share in early April, another flurry of selling in early June at $12 and $13 a share. Stock's now $14 a share. I'd rather be a seller and take my chips off the table here.
Very interesting analysis, Howard. That's great. Nick in California wants to know about true luxury stocks. Don't want to know about the false ones. Wants to know about true ones like Tiffany. Stocks with gross margins in the 60 to 70% range, net profits in the 20% range that don't discount their goods. What do you think of luxury like Tiffany?
Well, Tiffany really is one of the true jewels, so to speak, in the luxury retailing business. And consumer net worth has recovered to pre-recession levels, and the high-end consumer is back, both here as well as in Japan. We saw that in the first quarter numbers for Tiffany, which were very good. I have an $82 price target on the stock, which would be about 12 times earnings. I'm a longtime owner of Tiffany. I think it's a great long-term investment for people.
All right, let's see if we can squeeze in this one from Brian. He'd like to hear about a stock that's related to a positive area of the economy, housing, a USG. This is the old United States gypsum. What do you think, Howard?
Well, as you said, they make gypsum wallboard and other housing materials for building. This company has actually been through bankruptcy twice in the last 25 years. It's had a lot of litigation associated with it in the past. That gives me reason to hesitate to recommend it. But, and this is a big but, Berkshire Hathaway owns 15% of this company. They made that investment in 2000. I don't know whether they're going to buy any more or not, but that's a pretty good endorsement for some pretty savvy investors. They undoubtedly know this company better than I do. There are cleaner ways to play housing, however. Home builder stocks like Lennar or KB or Toll Brothers might be more appropriate for some people.
Let's get about a 15-second comment on Priceline, another one of your favorites, not one that necessarily was on the viewers' minds. The stock was trading about $813 a share when you mentioned it in May. Now it's at $825. You still like it?
Yes, conviction for Priceline has grown greater as consumer confidence continues to rise now to a 5-year high. So this company could sell at 25 times earnings by the end of this year. That would give you a stock price of around $1,000. So it's a mid 20% grower. 25 times earnings would be quite appropriate. I think it's full steam ahead for Priceline.
Howard, thanks for answering our viewers' questions this week, and thanks to the viewers for sending them in. We'll see you again soon.
Thank you very much.
All right, Howard Ward is Chief Investment Officer at Gabelli Funds.
Terrific segment. Well, coming up on the program, the new healthcare exchanges are just 100 days from being rolled out. But the options for individuals and small businesses could be very different. But first, let's take a look at the top performing Dow stocks of the second quarter.
New York City's Empire State Building must be a very popular structure. The owners of the skyscraper just received their third unsolicited offer to buy the landmark building. The latest, a more than $2.1 billion offer from Thor Equities. That's a local real estate concern.
Meanwhile, Paula Deen, not so popular these days. More companies are cutting ties with the celebrity chef after she admitted using some racially charged language in the past. Just today, Sears, its Kmart division, Walgreens, and JCPenney all announced that they're ending their relationships with Deen. That follows similar plans by Walmart, Target, Home Depot, and other sponsors to stop selling Deen-branded food cookware and products for the home.
Susie, the White House is employing a select group of workers to educate and enroll an expected 7 million Americans about health care coverage under the new Obamacare laws. And who are those workers? The nation's librarians. Since public libraries already have computers, upwards of 17,000 librarians will be trained to help uninsured individuals navigate all of the websites that outline the new healthcare marketplaces set up by Washington and individual states.
And it is the 1-year anniversary since the U.S. Supreme Court upheld the Affordable Care Act. Now, one of the requirements of this historic bill, American adults need to get health insurance. For individuals and small businesses, the options and costs will vary greatly depending on your age and where you live. Bertha Coombs has more.
I have to make sure that I take time off when I feel a little bit off.
David Ferreira is going without health insurance this year after launching a solo consulting practice in Washington. Due to pre-existing conditions, he was denied coverage by all but one plan, which cost $1,500 a month. Starting next year, he can't be denied coverage under the Affordable Care Act, but Ferreira will also have to buy insurance or pay a fine. And because he earns more than $45,000 a year, he won't qualify for tax credits to make it more affordable.
Nobody's entirely sure how much it's going to cost, but there's the big benefit that comes with the fact that I'll finally be able to get health care.
Ferreira could soon breathe easier. Washington's health exchange just published proposed 2014 rates. Estimates for individuals range from about $170 to $330 a month for a man his age, and $300 to $600 a month for those in their 50s. Estimates for small business plans start at about $140 a month for a 20-something worker to nearly $600 a month for a baby boomer. Analysts say exchanges in Washington and the states that are building their own health insurance marketplaces will likely see the widest plan options.
But for the self-employed and small businesses here in New Jersey and more than 24 other states that have opted for federally built exchanges, it could be a different story. The Obama administration still hasn't published rates or plan offerings, and a number of analysts say the options are likely to be limited.
The small business exchange isn't going to be able to provide as many options as originally intended. In fact, small business owners are only able to enroll all of their employees into one exchange plan, which is really no different than the status quo.
Some may be tempted to renew the plans they already have, but the self-employed and small businesses take a risk by buying insurance off the exchanges.
All of the premium assistance, all of the help for paying for health coverage will be in the exchanges.
David Ferreira, for one, can't wait for ACA open enrollment to begin October 1st.
I love the idea that I will not be able to be denied because I'm plus sized and because I had childhood asthma.
In the meantime, he's trying to stay healthy. For Nightly Business Report, I'm Bertha Coombs.
Finally tonight, this was a pretty good year to be the Queen of England. Records released by Buckingham Palace show that Queen Elizabeth II had a 5% gain in her portfolio this year on a profit of $380 million. Most of that gain is from the increased value of the so-called Crown Estate, property holdings that include much of London's Tony Regent Street as well as Windsor Great Park and other real estate. And her horse won it at Ascot just a week ago. Good year to be Queen.
Well, that's it for us. Nightly Business Report. It's a good year and good night for us. Thanks for watching. We'll see you next week.
And we'll see you in the second half of the year. I'm Tyler Mathisen. Have a great weekend, everybody. We'll see you Monday.
Nightly Business Report has been brought to you by
TheStreet.com, interactive financial multimedia tools for an ever-changing financial world. Our Dividend Stock Advisor guides and helps generate income during a period of low interest rates. Real Money helps you think through ideas for investing and trading stocks. Action Alerts Plus is a charitable trust portfolio that provides trade-by-trade strategies. Online, mobile, social media. We are TheStreet.com.
I'm Susie Garrett with a Nightly Business Report news brief. Wall Street's major averages all ended lower for June. This is the first losing month so far this year. But the Dow is still up more than 14% for 2013, its best first half of a year since 1999. Today, the Dow fell nearly 115 points. The Nasdaq was able to squeeze out a 1-point gain, and the S&P 500 closed down nearly 7 points. Shares of BlackBerry plunged 28% after an earnings miss on disappointing smartphone sales. On their first day of trading, shares of casual dining chain Noodles & Company soared 105%. Walgreens, JCPenney, Sears, and its Kmart unit are the latest stores cutting ties with celebrity chef Paula Deen. And Google announced plans to develop a video game console, one that might also replace your cable box. Be sure to tune into Nightly Business Report right here on your public television station.